With its cutting-edge technology and attractive design, Lucid Group seems to be an excellent competitor in the electric vehicle industry. Its shares have stabilized just around the $40 mark. The business confronts a number of problems and advantages as it enters fiscal year 2022, which may make or break the company's stock. As a result, the year 2022 has been designated as very critical for the LCID-Stock. What exactly are these difficulties? What are the opportunities for further development? What is the company's financial situation? These are the kinds of questions we'll be addressing in today's video. Welcome back to NewVehicleMedia, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar content. Comments are loved and featured in our upcoming videos. Recent months have witnessed huge fluctuations in the startup's shares. By early December, the LCID stock had fallen by almost 30% from its mid-November high of more than 100%. The sell-off includes a one-day decline of 18% in response to negative news. The Securities and Exchange Commission was looking into the combination of Lucid's special purpose acquisition company and its parent firm. Despite this, many feel that the business is on the verge of becoming a major player in the electric vehicle race. First client deliveries have been made, and the company is expanding its manufacturing facility. In light of this, investors are wondering what the future holds for LCID as we enter a new calendar year. There is a lot riding on the corporation keeping its half of the bargain and avoiding bottlenecks. For the Californian startup, the manufacturing ramp-up will be arguably the most critical milestone for the company in the next year. After starting manufacturing in September, the Lucid Air is expected to reach its full capacity in fiscal 2023, with deliveries expected to ramp up in 2022. A total of 34,000 cars can be produced yearly at the company's Advanced Manufacturing Plant 1 in Casa Grande, Arizona. While the Air sedan will experience a significant rise in manufacturing production in 2022, the company is not expected to attain maximum plant potential in that year. However, by fiscal year 2023, it's anticipated that Lucid would use the plant to its maximum capacity, producing and delivering 34,000 cars per year and generating a sales potential of $2.4 billion. The company has also begun the second phase of its expansion project in Arizona, which will double the company's current manufacturing capacity. During this phase, 2.85 million square feet of new plant space will be added to the existing facility, allowing for an increase in production capacity to 90,000 cars after the expansion is complete. Despite the fact that Lucid has not provided a clear date for when full manufacturing capacity would be available, it's expected to be after 2022. What they have made clear is their intention to expand into further markets. Recently, Lucid indicated that it will enter the European market in 2022, citing a surge in demand for electric cars as a result of numerous nations' pledges to reduce their reliance on fossil fuels for transportation. The company's Twitter handle stated that expansion to European markets will begin this year. Stay tuned for country-specific delivery information. While Europe is a primary target area, the company will also join the Middle East market in the same year, with the Chinese market set to be explored in 2023. These will have a significant impact on the number of reservations for Air sedans. While on the topic for reservation from November until the startup reports its fourth quarter revenues, the business expects to gather another 5,000 to 6,000 Lucid Air bookings. The business can potentially produce between 20 and 25,000 electric vehicles this year. The stock will benefit greatly from this, since they will be able to meet their 2022 target objective at this pace, which some thought was impossible. However, there are certain situations that are not beneficial for LCID. Back in December, the SEC requested information from Lucid regarding its SPAC merger. As far as electric vehicle startups go, the regulators aren't only looking at Lucid though. Particularly popular among those working in the electric car business are special purpose acquisition companies, and some EV firms have gone a little too far in their claims of technical prowess at times in the past. If there is proof of misconduct by Lucid, the SEC investigation and its decision might cause the company's stock price to decline in 2022. On the financial front, the year 2022 seems to be promising for the Californian business. Following the completion of the SPAC reverse merger earlier this year, the company now has an extremely solid financial sheet. Lucid had a cash balance of $4.8 billion in September, which did not include proceeds from the previous debt issue. Recently, the business successfully concluded a convertible debt offering that netted $2.0 billion in gross funds. This brings the total cash balance to $6.8 billion, and this additional cash will strengthen the company's already solid balance sheet and will aid in the financing of the production ramp that's planned to begin fiscal year 2022. However, as the business goes into the scalability level of manufacturing, its operational expenditures are expected to rise in calendar year 2022. Luckily, there is enough cash in Lucid's bank account to cover manufacturing costs, even if the company doesn't make much money. Revenue forecasts are expected to climb for 2022 as the firm scales up manufacturing. The market will be paying close attention not just to how many electric cars the firm is able to produce, but also to how well the company's client deliveries are going. For car manufacturers, increasing manufacturing while maintaining a healthy cash flow is a major problem, regardless of whether they are manufacturing electric vehicles or typical passenger cars with combustion engines. A delay in manufacturing poses a significant business risk to Lucid as well as to the stock. Second, when the company enters the most vital period of its existence in fiscal year 2022, it will encounter plenty of hurdles and hazards in the form of competition as well, and that will be difficult to overcome. However, although the risks are considerable, the potential gain is also significant. The EV startup must persuade the marketplace that it's capable of making the journey from the design phase of the project to the level of large-scale production without interruption. If Lucid is able to scale up manufacturing of its Air sedans fast and without delays, the stock of the company might revalue much higher than it has ever been. The American manufacturer is expected to become a prominent player in the electric vehicle competition. It has ambitions for a wide product range, ranging from luxury SUVs to more affordable electric vehicles, as well as the financial buffers to bear out those goals. Along with Lucid's superior technology, the company has a powerful brand, a beautiful appearance, and a product of exceptional build quality. Even though there aren't very many cars on the road yet, poor paint and other quality control problems have been avoided, which isn't often the case for new entrants in this market, which is a very positive sign. On the other hand, it confronts business risks like manufacturing bottlenecks, interruptions caused by semiconductor scarcity, and a slowdown of economic development. The price of LCID, like any other EV shares in 2022, is heavily dependent on whether or not EV excitement continues, while some experts anticipate that this will not be the case. Even though EVs had two good years in 2020 and 2021, there's no assurance that this will continue for another year. The industry could shift its attention to other things like metaverse and NFTs. This means that shareholders must monitor the mood and consider buying LCID stock on the drop or applying an alternate strategy of creating a portfolio. Mr. Entertainment predicts that by March, LCID would have climbed back up to 60 or perhaps 70 points. He's also certain that the PIF will sell between 10 and 20% of its stock. That should wrap things up for today. Keep in mind that subscribing is still free, and liking the video helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.